Welcome to the Scam Economy with your host, Matt Bender.
That's right, welcome to another episode of Scam Economy. This is episode 20. My, how time has just flown by. And there is a lot to talk about. I am your host, Matt Binder, and today we will be diving into Celsius. On the last episode with David Gerard and Amy Castor, we talked about Celsius as one of the Jenga blocks in the crypto crash. Honestly, it was sort of like the second Jenga block to be pulled out that really caused the whole crypto tower to start falling right after Terra Luna. But there's so much more going on here that I really wanted to dive into. And just to give you a little taste of what we're going to be talking about, on June 7th, Celsius, a crypto lending firm, dropped this blog post to try to calm its customers and clients who were worried about the crypto crash and how Celsius was going to be affected. Now remember, these customers and clients basically parked their crypto holdings with Celsius as if it was a bank. Damn the Torpedoes! Full speed ahead, reads the headline of this Celsius statement. It goes on, over the past several weeks, the entire crypto community has faced a challenging time. Yada, yada, yada. We at Celsius are online 24/7. We are working around the clock to continue to serve our community. We have made it through crypto downturns before. Celsius is prepared. And it goes on. Let us be clear. Celsius identified instability in the Luna UST peg early and acted swiftly to protect our customers. Celsius continues to process withdrawals without delay. Now fast forward just 5 days later, and then, damn, the Torpedoes. Celsius has paused all withdrawals, where it remains frozen to this day, and there are a lot of rumors and speculation circulating as Celsius hires a firm to restructure the company. But we'll be getting into all of that in depth very shortly. But first, if you'd like to support this show as we now hit our 20th episode, be sure to go to patreon.com/MattBinder and subscribe to a monthly membership. It really helps keep this show going. Hopefully very soon I'll be able to bring some people on board to help create more content and disperse the content I'm already creating in more ways. Also, you could support this show by going to youtube.com/MattBinder, where you can catch the YouTube video version of this show. You can also support this show by going to twitch.tv/MattBinder, where I stream the post-show live. And if you're an Amazon Prime subscriber, you get a free paid subscription every month with your Amazon Prime subscription. So why not use it to support your favorite creator? Maybe that's me. Instead of just letting Amazon, keep it every month if you're not already using it. Now, let's jump into Celsius. And joining me now is Mike Burgersburg of Dirty Bubble Media, who, quite frankly, has been on top of this whole Celsius thing for longer than anyone else I've seen. Mike, thank you so much for joining me today.
Hey, thanks for having me.
Now, I people should know that Mike Burgersburg is obviously a pseudonym. Where does it come from, by the way?
They explained this on the other podcast as well, but I was literally like eating a burger and reading Bloomberg when I made my Twitter account. I wasn't like planning to use this for anything more than just following people and learning about stuff. So,
right.
Yeah,
I heard. I was listening on Crypto Critics Corner when you were on there, and it hit me that when you said that, and I was like, I have to. How do I not bring up that amazing origin story?
Yeah, I like just dumb jokes to make myself laugh at least, So
right. So let me ask you this first, because I want to go through every little thing here in terms of like just because my audience is not is very interested in crypto, but they're not technically all like super crypto heads like I'm sure a lot of other crypto podcast listeners are. So I want to walk us through even the basics, but I want to ask you up front first. What was it about Celsius that drew you to talking about it? And for people who aren't familiar, Celsius, I guess you can call it like the second shoe to drop after Terra that led to this second, this follow up crypto crash, I guess we can call it.
Yeah, so Celsius was was a crypto lending platform. Basically, what they allowed you to do was individuals could either deposit crypto and earn like a yield on it, which they called rewards to avoid regulatory scrutiny. They also had a product that was borrowing, where you could lend them your crypto as collateral, and then you could borrow dollars against it. In either event, the company assumes full control of those assets and then can do whatever they want with it. So my interest in it was kind of spurred by two things. First, I just got interested in the concept of what even is a crypto lending company and how are they earning yield. It just seemed very odd to me that these assets that are fundamentally, non-productive economically are somehow generating this magical yield that's far above, the returns you can get anywhere else in, normal regulated markets. So that was one thing. And Celsius particularly got my interest, really because of Alex Mashinsky, the guy who is the founder and CEO. He had he claimed to have a background that was a little bit different from the normal crypto, entrepreneur type. I mean, he's this older, he's in his, I think, late 40s, early 50s, has quote unquote $3 billion in exits under his belt, founded a company that went public by IPO in 2004, and claimed to have been the inventor of VoIP, among other things. So he was a little different. And I figured that, if any of these companies were legitimate, it was the one that was run by the guy with all of this extensive business experience. So that's kind of where I started. And just over time, it kind of spiraled from there as I discovered more and more things that were kind of wrong with the picture.
Right. So I guess let's talk about this in terms of like, what is it that Celsius does? Like, why would you go to Celsius? And like, what did Celsius provide? Like, what is the service here that Celsius was performing?
So it's a little bit, you have to understand Celsius is more than just a service or just a business. It really was more than that, because it was built around this idea of a community, and their motto was unbank yourself, which kind of has some ominous, foresight, I guess. But right. Unbanking yourself is more than just like a tagline. It's actually like a philosophy. It's, the argument is that the banks are all earning this kind of like really high yield on the assets that they have. It's just that they don't give it to their depositors. They keep it for themselves. And so their argument was that, well, in crypto, we don't have to treat you like a evil bank does. So if you give us your assets, Celsius's claim was that they would pay you back 80% of whatever they earned on your assets, and they would keep their 20% for their expenses and profits. So what Celsius was offering, like I said before, kind of just basically two different products to individuals. Basically, you can deposit your crypto with us. You'll earn this yield. It allows you to hodl your assets and still earn some money on top of them while they continue to appreciate in value, because everything in crypto always goes up. And then the other product, the borrow product, was really kind of marketed, and you can especially see in the early 2020s and stuff. There are a lot of tweets by Alex Mashinsky, who was basically saying what rich people do is they take their assets, and instead of selling the assets and paying capital gains, you borrow against those assets, and then you can finance your lifestyle with these low cost loans and not have to sell your crypto. So that was kind of the two things they were marketing to individuals. But what they were doing behind the scenes was a little bit more complicated than that.
Right. So in terms of you would bring your money to sell, who was going to Celsius on the other side though? Like, I know they would they were a lender, right? So who are they lending to?
That's a very good question, and I have not had any answers to that question. In terms of the claim or the description was often that it was these institutional borrowers who were, maybe market makers or traders who had these strategies, whatever they were, and then would use this crypto to make yield and then be able to pay these very high rates of return to Celsius. That was kind of how the business was often described. However, they also would say that there were other sources. I believe it was 5 different sources of income, and that's why Celsius was better. They also talked about putting money into decentralized finance or DeFi. They invested a significant amount of money in Bitcoin mining. They actually were filing to take that part of their company public right before they went under, or they paused their withdrawals, whatever you want to call it. So they had a number of different strategies that they were claiming to be working on. But from what I've heard and what I've learned, it seems like the vast majority of their profits were coming from these kind of esoteric DeFi strategies.
Now, did people who were hodling and letting Celsius hold on to their crypto holdings, did they know that, or did they like what did they think was going on? Like where did they think, if they even thought about this at all? Where did they think these like enormous yields? Like did you mention the yield? I'm sorry. What yields were they promising, and where did
it varied quite a bit, but the highest that I remember seeing was like 18%. Stable coins, so dollar equivalents, were earning like double digits for most of the time that I was following them, which would have been like just the last year or so. Bitcoin and Ethereum like 6 or 7%. So I mean, regardless, all much higher than a bank, or even like, I guess treasuries now you can get 9% on a certain treasuries, but it clearly was something that was a little bit different. And Celsius actually had higher yields than a lot of the other companies in that business. They had actually continued to maintain higher yields even when some of the other ones like Nexo had dropped those yields. So yeah, I don't really think that it relied a lot on the trust me narrative, and I think that they created this aura of expertise and competence that people trusted, and they didn't really ask questions about where the money was going. If you would listen in, because they would do weekly AMAs, and the questions were not usually about things like, where is our money going, or is this sustainable, or is it safe, what are the risks? The questions were about things that were really kind of silly in hindsight. But so yeah, I don't know. I think that people saw the or heard the story. They saw who they thought Alex Mashinsky was and who the other people involved in the company were, and I think they kind of suspended their disbelief and put their money in because they wanted to get rich. And unfortunately, it doesn't always turn out well.
That's wild. I mean, there are people who, obviously, a lot of people who don't even trust keeping their money in banks. I'm sure that's a whole target market.
Well, that's
too.
their market.
Yeah,
that's their market. These are people who think that the banks are. I mean, hey, you know what? Banks are evil. Like, I mean, let's not lie about that. I mean, come on, the whole financial industry is bad. Like, there's no question. But that's the crazy thing, is that there was so much. Yeah, like the unbanking, but then simultaneously, you're not only entrusting your assets with this company that's existed for only a couple of years, you're trusting them with an unprecedented amount of control over your assets. Because as I kind of alluded to earlier, when you give your assets to Celsius, they would use terms like accounts and deposits, like kind of surface level. But if you actually read their terms of agreement or terms of service, it specifically stated that those terms were meaningless as far as they were concerned. You didn't have any kind of fiduciary duty to you. You were handing your money over to them, and they could do literally whatever they wanted with it. And there was no guarantee that they would ever give it back to you in the event of insolvency. You're an unsecured creditor. Like, you are last in line as a customer. And that was what thing for me is, like, one of the first things I ever did was just sit down and read their terms of service. And that was enough to make me go, holy crap, there is something wrong here. Because if anybody agrees to this, clearly they're not reading it, or they're not thinking about what they're reading, because you're handing them full control to do whatever crazy things they want to come up with.
The idea to me too is like their target audience. Sure, they don't trust the banks because, like you said, I agree too. The financial system and the big banks are terrible, evil. But the thing that they don't seem like, but if it wasn't for that one little thing, the whole idea that your money is safe in the bank because the government says it's going to be safe and up to a certain amount, and $250,000 it's high enough for, I would say, most people. It's certainly high enough for me by many multiples. So, but that they wouldn't even care where their money is going without even like that guarantee of your money is safe, at least up to a certain, like, your money's not safe at all with Celsius. You have no idea where it's going. That's wild. That's wild. So it's also pretty weird that no one seemed to have, because for me, like, did Celsius call themselves like a DeFi company? Like, technically they are, right? They're a decentralized finance like firm. Like, that's what
they're CFI. Yeah, it's CFI instead of DeFi. Yeah, and
okay.
It was kind of like this weird narrative where they would kind of switch narratives based on whatever they felt like saying. Like DeFi is less safe than CeFi because we have these alternative ways of doing things, and we can lend to institutions and
What
all
is
these other
CeFi? Does that
things.
just
But yeah,
mean
in practice,
is that just like
centralized
Celsius?
finance.
Oh,
Centralized finance. Yeah.
What? That's the
Yeah.
what? Isn't
Yeah.
that run counter to everything that the whole crypto market's supposed to be selling? What?
Yes. And actually, my favorite tweet of all time, and I think it always will be, was when I'd asked a question, and it was the first time that Mashinsky actually responded to something I had tweeted about Celsius. They had been borrowing money from a DeFi protocol and using it to like pay out withdrawals. This was kind of towards the end of where things were really starting to fall apart. And actually, their CTO responded and literally said, like, trust the professionals. Don't listen to all the evil fudders out there. And the fact that the guy would say trust the professionals in an industry or whatever you want to call crypto that is predicated on you're supposed to be like doing your own research, and people are supposed to be personally responsible for everything. Yeah, their narrative of this whole thing was really targeted at people that didn't really know a lot about crypto, I think. Which, I mean, like, I don't know a lot about crypto. I'm not an investor in crypto, but like it was targeted specifically at people who weren't comfortable doing their own asset deployment into these various DeFi Ponzi's, essentially. But
So basically, just to reiterate, sort of, the centralized finance is basically just you're giving your money to, in this case, Celsius, and trusting them to determine what to invest in for you.
Exactly. And other companies like that would be like BlockFi, Nexo, Voyager Digital was engaging in that as well. So there are a number of smaller ones as well, but those are kind of the big ones that are involved in that market.
Now it's last week on this show on Scam Economy, David Gerard and Amy Castor joined me to talk more broadly about just like all the little Jenga blocks that needed to be ripped out of the tower for it to all come crumbling down. And when he brought up Celsius, one of my listeners called into the post show that I do, like the live stream post show I do, and he called in and he reminded me. I had not remembered this, but apparently on one of the post shows for one of the earlier Scam Economy episodes, like episode 3 or 4, a listener had called in and they were like a pro crypto, they were a crypto investor. And they were telling me how they were making all this money through yield, this like great yield at Celsius. And now this is like, geez, how many months ago now? 5 months, I want to say, 5 months ago. And I was not familiar with Celsius at the time. So I'm asking about what's going on here. I don't remember exactly how much, like what the percentage that they told me, but it was something like that rang, red flag here to me. Like that seems too high. That seems like there's a problem here. And they had said they put it all in Celsius. And when the listener called in on the last show, and they were making how great they were doing, they're making so much money. And so that listener called in, they had said we should have an open call for that person to call back in and let's see where they are. Now I've not heard from that person yet. This is only less than a week now ago. But I mean, I gotta imagine this person lost a lot. Like, from the people you've heard from, were they just letting everything sit with Celsius, or were they actually taking some of the profits? Like, were there people actually making money here? Other than, of course, the Celsius employees and yeah.
Well, the employees I don't think make all that much money, but the people at the top I think made some money.
Yeah, that's what I'm right.
There were people that got out in time. Yeah, there were, and it'll be interesting to see what happens with legal proceedings and things, because they might be subject to clawbacks and other things that might make them a little bit less happy about their experience with Celsius. But a lot of people had a lot of money. Some people all of their money. And I mean, life savings, we're talking. Yeah, I've had a lot of messages from people who lost everything. But I mean, technically they've just paused withdrawals, right? So we don't actually know back. So it's possible people can recover a lot. I can't tell you in detail what their financial condition is. I have my suspicions, but there's nothing I can prove. So it'll be some time before we find out, just how much people are actually going to recover from this.
Last I saw, I think they had hired a law firm that specializes in like restructuring, firms like this. Is that the case? They're currently trying to work through
Yeah,
this.
I mean, it sounds like that's like bankruptcy is on the table, but I haven't heard anything to that, certainty to that. In fact, I believe they also hired Citi to kind of consult with them about trying to figure out ways to deploy their assets or whatever. But I mean, part of the issue is that a lot of their funds are locked up in relatively illiquid investments that are not easy to monetize. So, and it becomes difficult too. I mean, if you think about, they were borrowing a lot of dollar equivalents, and then they have crypto as the kind of their assets, and crypto has been, declining rapidly in value over the last couple of weeks. So their position might actually be worsening as time goes on. So it's kind of a difficult situation, and I feel bad for the all the employees who are trying to salvage the situation. But
How big is Celsius the company? Like how many people do they have working there? What's their
I had
how
heard
big was
900.
not what
900.
wow, okay.
Yeah,
So how
they
many
had expanded rapidly.
do we and they're only like what, like 4 years old or something, right?
Yeah, I think so. 2017 was when they were technically founded. I think 2018 is when they really like came off the ground. And I don't know in detail like how they grew or how rapidly. I think most of the growth was relatively recently, and most of the hiring was relatively recently.
Do,
Um,
do,
but
do
yeah, they
we
had, I believe, 900 employees.
do we know how much in holdings they have? Like how much of their customers? Like how many customers do they have? Do we know this sort of thing?
Well, they claim to have over 1.5 million users, but then they also say only like 500 some thousand were actually active. So it's a little bit difficult to know how many people had funds on the platform. The other thing that's difficult to disentangle is that they were accepting funds from other sources. There's a company called Nuri in Germany that was sending them. Essentially, their business model was take people's Bitcoin and then send it to Celsius, and they claim to have like 200,000 users. So it's not really clear if like Celsius was counting those users in its total or not. I don't know the answer to that. But I mean, there's significant exposure, and it's worldwide. It's not just in the U.S. It's probably they have offices in Israel, multiple offices overseas. So yeah.
So, from the people you spoke with who had left, trusted their money with Celsius, do you know where some of these people were finding out about Celsius? Like, for example, when I've done a few episodes about Terra, and it's a stable coin that was traded on all the major exchanges. So it's easy to see how someone dipping their toes in. A friend tells them buy some Terra. It's a good investment. Buy some Luna, the sister coin, and they just go to one of the like Coinbase, the most mainstream of U.S. exchanges, and just easily buy some of that. But it seems like they're to A, understand the Celsius, and then B, even discover it to begin with. There seems like there has to be some higher bar of entry to even do that. Do we know how people were finding out about Celsius and how they came to decide this is where I'm staking my cash?
I think a lot of it was social media. You can still find all the videos on YouTube. There's tons and tons and tons of videos, both from the company as well as from various like finance, crypto people who claim to know what they're talking about. Whether or not those people were paid, I don't know. But there were a lot of people on Twitter as well who were very active in promoting Celsius. Celsius had a what do you call it? Like a rewards program essentially for recruiting people. I think it was like $50 in Bitcoin per person you recruited. So for some of the people who had really large audiences, you could make a decent amount of money actually pulling in customers. So I think that was a big part of it. And I mean, honestly, I think a lot of it, I mean, again, it comes back to like, you know, whatever else he is, I think that Alex Mashinsky is a good salesman. I think he knows how to convince people that something's a good idea. So like by doing those AMAs every week, people said, "Oh wow, look how transparent this company is," and he's willing to come and answer all our questions. And I think that people would come and ask questions, and unfortunately, I don't think they really asked the right questions. But because they got answers to the questions they asked, they thought this was an honest company that was doing safe things and kind of went forward with it.
Let's actually get into a little bit into Alex Mashinsky, because I know he seems to be a colorful character with a colorful past. Can you tell us a little bit more about him and how he came to to starting Celsius?
Yeah, so I mean, prior he came from Israel. I believe he was from Ukraine initially, and then was in Israel. Claimed to have finished college, but I don't believe that was the case. There was an article in Bloomberg about that. Served in the Israeli Defense Forces briefly, I believe. Not really sure what his position was there. And then came to the U.S. in the 90s. Tried his hand into a number of different businesses that didn't really pan out, and eventually got into like building telephone switches, and kind of got interested in the VoIP business, which is the voice over IP, which we're using right now with Skype. And so one of his claims that he would often rely on was that he was the inventor of VoIP, or that he had, quote, foundational patents on VoIP technology. And that's simply it's absolutely false. The technology was invented well before he got involved in the field, and his patents are actually involved in a very different type of technology. But long story short, he built a business, and he had this idea. And the original idea that he had, and he did have an original idea, was for selling bandwidth via exchanges. And that was actually what his patents in the mid 90s were for. And then he founded the company called Arbanet the Exchange, which was kind of built around this idea. Incidentally, it's funny that the other company that got really big into bandwidth exchanges was actually Enron. And Enron kind of got the idea, apparently, from Mashinsky. There's an article in the late 90s about that prior to Enron collapsing. And that was actually a big part of their fake business that Enron was supposedly making money on that didn't actually exist. But regardless, so Mashinsky is able to build this company on this idea. But it sounds like, from everything I've read, that he wasn't a very effective executive. He would spend more time kind of jet setting around and making deals that he couldn't fulfill, while all the other people in his company were desperately trying to just keep things afloat. My favorite story is at one point, the other investors in the company got upset and were going to fire him. And so he came back from, I think it was China, some business trip, and actually fired like everyone, like his entire executive staff. And then a few days later had to hire them all back because there was nobody to, run the company. And then shortly after that, so there's a really great article about him in '99 that's just really interesting and covers a lot of this stuff. But then like in 2000, he was forced out as CEO. Eventually, he's not even on the board. In 2004, Arbanet goes public. He describes this as the best IPO of 2004, which Google went public in 2004. So that gives you some ideas of the credibility of that claim. Arbanet survived for a few years. I don't know if it was ever profitable. Eventually, it was sold for like less than a tenth of what it IPO'd for. So it was a failure. I think he made a lot of money off of it, but from an investor's perspective, or from like a sustainable business perspective, his first company was a spectacular flop. And he's kind of followed up with that ever since with various companies that kind of never seem to really get off the ground.
And so, yeah, I mean, I'm guessing he keeps the I know it's not directly to Celsius, but I'm guessing he keeps his connection to Enron sort of. He didn't include that in the resume.
No, so Enron stole his idea, actually. That's the thing that's funny about it, is like Enron stole this idea for this bandwidth exchange essentially from him, is because he was just talking too much about it. But like, it wasn't even a good idea. That's the thing. Like, it was clever, but like even before this company like went bankrupt, there were a lot of people saying this isn't even really a sustainable business model. There's not enough volatility in the price of bandwidth to even like make it a viable like trading. You can't really trade. Like, it's not worth trading it, essentially.
Right. Yeah. You know who literally loved my previous idea? You ever hear of a little company called Enron? I mean, that would have
exactly.
that would have that would have probably kept people away from Celsius. Yeah. Let's see how good your next idea is and who wants that one. So,
but he makes other claims too. Like he claims like he invented Uber. He invented the technology underlying Twitter. He claims that one of his companies called Elomatics had many of the patents for like cloud computing. So he makes claims like that throughout his career. You can actually he has a website, I think it's Mashinsky.com, and you can go through his like claimed resume and just read it and see what you think. I mean,
and these are all bullshit.
Everything I looked into, I never found anything to substantiate most of it, but maybe I missed something.
Damn, I mean, he's fooled some people because I was looking at some of his, on his Wikipedia page. I mean, who knows who keeps this up, his Wikipedia page. Maybe I could ask Molly White about it. But he was listed as Business Insider Silicon Valley 100, the New York's coolest tech people in 2010. And his VoIP IP was recognized by Internet Telephony Magazine. Never heard of it before. So he certainly is tricked some people, it seems, into writing about some of his embellishments.
Yes.
So it seems like he's not the only person. Well, it doesn't seem like this person is with Celsius anymore, or has been for maybe a little bit. But wasn't their CFO arrested?
Yeah, so that gets into one of the other reasons I really started looking into this company, which was the guy named Mashinsky from Israel, who is an interesting character himself. You could do like a whole probably series on his life. Has kind of an interesting, like, his career is very similar to Alex's in that they both kind of started out by forming this like telecom related company that was kind of got a lot of attention, but ended up being a failure. Made some money on that, then made his own VC firm and started like spinning off all these crazy companies, most of which were crypto related. So long story short, it turns out that this Hogeg was running multiple scams in the crypto space. One of them was called Siren Labs, which was essentially claiming they were going to build a blockchain-based smartphone technology. And that went nowhere. It was a scam, and they made a bunch of money off of their initial coin offering. And there were a number of other ones as well. So oddly enough, it turns out that Mashi Hogeg was an early advisor to Celsius Network. He actually shows up in the white paper. Early investor in Celsius Network.
Oh, that's
and then
interesting,
conversely,
because they had when this had come out late last year, they had distanced themselves, and they basically said, we were recently made aware of a police investigation in Israel involving an employee. I guess they're talking about their CFO here, not Moshe. But while this is in no way related to the employee's time or work at Celsius Network, the employee was immediately suspended. But that also makes it seem like okay, the CFO, I think his name is Yaron Shalom. They're distancing from him, but they're also making it seem like there's no like Celsius connection at all, when you're now, you're sharing with me that not only was like their CFO doing something on his personal time unrelated to Celsius, like not tied to Celsius, but he's doing it with someone who Celsius was previously working with from its earliest moments, like from its founding.
Yes. And it gets better because conversely, Alex Mashinsky was an advisor to the Siren Labs project that Mashi Hogeg was running. And was an investor in that project.
Oh my God.
And his name is, it's on all their websites. It's not like I'm like, people are always like, oh, you're making this up or blah, blah, blah. Just look at the website. Just go on Internet Archive, go look up the website, and you'll find it. It takes about 2 seconds. And in fact, so Mashinsky has this venture capital firm called Governing Dynamics. And actually right on that website to this day, as far as I know to this day, it still brags about participating in that project. So that goes all the way back to 2018. And one of the reasons I really started taking this all seriously was that the first AMA where I ever actually asked Alex a question, I asked about, hey, we heard that the CFO was arrested. Can you tell us about that? And he told us that he didn't know. He was like, it has nothing to do with that Hogeg guy. He pretended like he didn't know who this Hogeg person was. And I mean, clearly they've been doing business together for years and years. And so the fact that he felt the need to kind of try to obfuscate that was shocking to me. It subsequently turns out that another executive, in addition to Mashinsky and the former CFO, were tied to Hogeg. Their CRO, or their chief revenue officer, which I still don't know what a chief revenue officer actually does, used to be an attorney.
The chief of all the revenue, obviously.
Chief of revenue. Yeah, right. Yeah, whatever that means.
Right, but he doesn't have much to do nowadays, it seems. He doesn't have much to do.
Yeah. It seems. No, he probably is sitting around doing nothing. But he was Mashi Hogeg's lawyer. He represented him in a number of deals, both in crypto and in other deals, like when he purchased the soccer team in Jerusalem. So there's 3 connections.
So what did Syrian Labs do that was I guess illegal? Like what was their scam here? Like what were they pulling?
They said they were going to do something and they never did it. I mean, they raised over 100, I think it was over $130 million with their initial coin offering to build this phone. Essentially, the project never went anywhere. Eventually, they got sued by the company they were renting the space from for the factory. I think a prototype was once built, and then it was like going to cost like $10,000 or something ridiculous. It was never delivered on, and that's a consistent. I mean, multiple projects that were like this that Hogeg participated in. And there was another one actually. They were going to create a stable coin called I think Soger, and actually Celsius was also involved in the early stages of that project as well in promoting it and saying that they were going to allow staking in it. So the connections go back a long time, and they're very clear. And the fact that they didn't want to admit that, they could have spun it. They could have said, hey, we did business with this guy, and you know what? It turned out he's not a good guy, and we wish we'd figured that out. But we've since cut ties, blah blah blah. They chose not to do that. They chose to try to hide it, which tells you that there's something there that they don't want people knowing.
Right. Right. Yeah, because it seems like especially in this world, it would be, in crypto especially. I was thinking of, finance in general, but especially in crypto, there are quite a few bad actors. So it seems like, you basically could throw a rock into a crowd, and the odds of you hitting someone who's a bad actor seems pretty good. So if you just come out and say oh, we hired this guy and he turned out to not be who we thought he was, and we've cut ties, it's a horrible thing. We're gonna make right whatever we can that had to do with us. Seems pretty simple. It seems pretty straightforward. That I think a lot of crypto people would be very receptive to that. So for them to just straight up try to hide something, it seems like it's got to be worse than just they happen to hire a bad actor without knowing about it.
Exactly.
So let's talk about, speaking of these various different Syrian, I think it was Syrian Labs, them not delivering their project. Celsius has their own token, Cell Token. What is how does that factor into the business model, or is it just one of those things where we needed to raise money, you can own a piece of Celsius or something like that?
Well, so yeah, the narrative changed around that token over time. If you read their white paper, which unfortunately I have done, it makes for great reading. The whole model of their business is a quote unquote flywheel, and the flywheel essentially is they issue the token, people buy the token, and then they loan out the assets from customers, and then they buy Cell Token back on the market to drive the price up. And essentially, the idea is there's this virtuous cycle where basically Cell Token gets the bump from all this yield that's being earned, and it builds this sustainable system where the money is paid out in this token. So the original idea, and if you look at the white paper, Cell Token is referred to as the backbone of Celsius Network. It's like the core idea of the whole project, actually. And then subsequently, as the performance of that token has plummeted, the narrative changed to, well, Cell Token is not the company; it's only a part of it. It's just one thing we're doing; it's not the whole thing. And that does a great disservice to all the people who heard that narrative and bought in because of it, and then subsequently found out that they weren't going to do anything to support it. The valuable thing to my mind that Cell Token did for Celsius was that the company retained ownership of approximately half of, there were, I think, 696 million tokens. They retained half of them on their balance sheet, 117 million of which were never supposed to be sold and just kept in the treasury forever. So they would mark that to market on their balance sheet. So at one point, the highest that price of that token ever got was $8. So they had $2.6 or so billion on their balance sheet in this token that was just value that came out of nowhere.
That's
because it wasn't. The thing is, it's unbelievable. But because if number one, Alex himself said this in many AMAs on Twitter. The company said it. The company was the largest buyer of the token in the market. So literally, the company was dictating the price of the token, and then simultaneously, it's the company itself, is their largest asset on their balance sheet, right? So it allowed them to spend over $2 billion up out of nowhere. And that definitely factored into their raise of $750 million a few months ago from the Canadian pension fund CDPQ and the investment firm Westcap. They were using this like for the company. This was like that was where their value came from. So it's really, I mean, amazing that something like that was, that somebody was willing to invest in something like that without doing a little more due diligence, because it doesn't really make any sense when you think about it for a couple seconds.
I think this is. I really want people to follow along what you just said. So I want to like slow it down and just reiterate here and sort of like break it down. And please correct me if I'm missing anything. So basically they printed up these money, these cell tokens. They give themselves a large pot of it. And again, they didn't put the money into the pot. They're just taking some cell token, no cost to them. And then they start selling them, and the price of the cell token hits what you said, like a high of $8. And they say, oh, all of ours are worth $8. Now, mind you, I want everyone to understand this, being that they never put the money in for their quantity of cell token, that actual $8 times the number of cell tokens does not actually exist, because again, they took a whole pile of them, no cost to them, and they're just holding them, but they're also valuing their pot at $8. So if they were to just decide to sell that all off, everyone else who put in that money, that's where Celsius's $8 sell off, their profit would come from, and all those people would be left with nothing, because again, Celsius never put anything in for their token supply.
Yeah, and I mean the thing is, the market could have never sustained any kind of real selling from the company. I mean the volume traded was very thin always, and the company again was the largest buyer. So if the company became a net seller at any point, the price would have tanked to basically nothing. There's no evidence that the company ever did that, but the point being that the value of the token was on their balance sheet was really it was meaningless.
Right, because they were sort of like money off of that. Yeah.
Think about it like a company going into the stock market and buying its own stock up and buying all of its own stock and being the only person buying the stock on the market. It becomes a meaningless like abstraction at a certain point. Because this token doesn't confer anything. It doesn't give you any ownership on Celsius. It doesn't give you any special. It gives you the privilege to earn like more yield on their platform and a couple other things. But in terms of like actual like legal benefits or like rights or anything, it gives you nothing. It's just a token.
Wouldn't in that stock market example though, wouldn't that even still not be as bad, because even then the company would still have to actually put forward the money to actually buy their stock back?
Well, so the Celsius claimed that that's what they were doing. They claimed that they were going on the market and buying this token. That's what they claimed they were doing.
All right. Okay. I see now. All right.
Whether or not they were, I don't know. It's very hard to say.
That's
and they also had relationships with market makers making the market for these things. So they basically controlled the whole market for their own token. It's a little incestuous.
Right. And also, I'm thinking of, because I was following the whole, really digging in and I did some reporting on all those shit coins and meme coins that were popping up every other day. I mean, there still are, but especially during that like height of like the influencer promotions of them, like last summer. And these guys were just printing up coins, not putting their own money in, and keeping a whole swath of it, and then selling them to retail investors, and then just selling off their coins that they spent not a dime on, and that's where their profits were coming from. And it was a risk-free investment for them, because they didn't spend any money on the tokens they were printing up.
Yeah, exactly.
So let's actually hold on. I had another question here. Okay, so this is what I came to here in terms of I was looking into this. So Celsius is where they are right now, obviously because of the whole crypto crash we're seeing right now. But it seemed like there were prior investments over the past few months that had failed, that I'm sure put a dent into their business. I read that they lost money on an investment in a company called Badger DAO, and then they had holdings in Terra, which we all know what happened there a couple of weeks ago. But then I came across this company that apparently is the one that is the thing that's hitting Celsius or hit Celsius the hardest, and that is Lido Finance. Can you tell me a little bit about that and what's going on there? Something they're a company or a firm that invests in staked ether. I'm guessing that has to do with staked ether on the Ethereum, the new Ethereum network that isn't really public yet.
Yes. So before that, for Terra, yeah, Celsius had over $500 million invested in Terra. They escaped that position pretty much intact. I think their losses were maybe $10 million. So they actually got out. And actually in the process, they were one of the key contributors to basically the collapse of UST. So it shows just how much of an effect these big players can have on the market of decentralized finance. Anyway, yeah, the staked ether thing was interesting, and that's something that I kind of discovered by accident that I think had a lot of effect on people's opinion of their
I'm sorry.
financial situation.
I just want to pause right there. Did you just say? I guess I'm taking this all in. There's so much here. So you're saying that when Celsius pulled out of Terra because they pulled out so early, and I guess they had pretty big holdings, they helped tank Terra by pulling out everything. Yeah, right. Okay.
There's analysis done by Nansen, the blockchain analytics firm, that showed that Celsius is one of, I think, 7 major large wallets that contributed to the depeg. Actually, I was live tweeting it when that happened. It was kind of crazy. But yeah, because they were so big. I mean, they had at least 130 million in UST. I mean, that's a large amount for one wallet to have, and they cashed it all out in a few hours. So they basically sucked a bunch of liquidity out. That was, I mean, whatever you want to say, whether or not that was something they should have done or not. I mean, they shouldn't have been investing in an obvious Ponzi, because that's what Anchor Terra is a Ponzi scam. So they were investing their customers' money in a Ponzi. So whatever that tells you about what their strategies are. But yeah, I mean, they escaped. And in the process of escaping, they helped tank the market. So that's something to consider. And initially, the company lied and said they had nothing to do with it, then subsequently kind of walked that back.
Right. Makes sense.
Back to
they're also interconnected. Yeah, but go back to the staked ether. Yeah.
They don't want to admit that they hurt the crypto market because there's this weird fake camaraderie that everybody has. But in process, of course, everybody's just trying to make money off of each other. So it's kind of a funny dichotomy there. So what Celsius had done specifically with their ether position, which was, I think, the second largest set of customer assets they had under management. They had taken a large portion of it and had staked it into this ETH2 deposit contract. Theoretically, you're earning 8% yield or something on that, but the problem is that it's all locked. You can kind of think of it like a certificate of deposit, where you have you put it in for a set period of time and you can't take it out until that period of time is over. The only difference is being that there is literally no way to get the money out at all with this ETH2 contract, and it's kind of an indefinite period. It won't be unlocked until this transition happens, and I think for a period of time after that as well. So they can't access these funds. And I think it was over 288,000 Ether was what I found. I think CoinDesk reported 325,000 recently, but a large portion of their Ether they had locked directly up in this ETH2 contract and had no way to use it. It's in this contract. It's gone until they can get it back. It's just sitting there. And then an additional, at least 480 some thousand, they had staked indirectly through this Lido service. And what Lido does, and this is one of the craziest things to me of crypto, the concept of this is nonsensical. You could deposit, if you gave them your Ether, they would deposit it for you into this staking contract, this ETH2 contract. And then they give you back a token called staked Ether. And for whatever reason, the staked Ether was valued by the market as being exactly worth 1 Ether, right? Even though, if you think about it, it really should be valued at a discount, because you don't know, there's no guarantee that this transition to proof of stake is ever actually going to happen, right? There is some uncertainty about that. You don't know how long it's going to be, and you can't use it. At least with Ether, you can use it to pay the gas fees or whatever. There is some theoretical utility to having Ether. You can't do that with staked Ether. However, the market treated it exactly the same as Ether.
I do love how the Ether utility is to pay the fees that are given to you by Ether.
That's about as much utility as you get in any crypto. That's about as much utility as you can possibly get. If you can pay everybody else fees for using it for the benefit of, being part of the future of finance. But yeah. So long story short, you could get this derivative that they treated as equivalent to Ether. And then all these DeFi protocols said, hey, that's great. Come and give it to us. and will lend against it just like it's normal ether, right? So the problem with that is because the ether that's there underlying this derivative asset is totally locked and inaccessible, there is no way to exit this ST ETH except through the market, right? And so what I was doing for a while was I had collected a number of their wallets, and I was just kind of following their positions. Every once in a while, I would just tweet out like, "Oh, hey, here's like my audit," like jokingly, "Here's an audit of like their positions. Like, here's how much ETH they have here and there. Here's how much they borrowed, etc." And someone else contacted me and said, "Hey, like, what percentage of their ether have you found?" And I was like, I did the math, and I'm like, "Well, looks like I found most of it." And they said, "Well, if you think about it, if you look at there's really only one way to sell this ST Ether, and it's through this like liquidity pool called Curve, right? There's like this like pool. It's like a decentralized way of trading assets, essentially. If you look at that pool, there wasn't even enough liquidity there for Celsius to exit their position, and they were facing large withdrawals at the time. So the issue became they only have so much ether they can actually access to give out to customers. The rest of it is locked up totally and inaccessible, or it's in the form of this derivative that right now is worth almost an ether. But then after that Terra collapse, it became worth less than an ether because people realized that maybe there was some risk involved. So they couldn't exit the position. And it showed that like technically they were already insolvent, and that if they tried to exit the position, they would crash the market and become even more insolvent. And on top of that, they had borrowed against it. They had borrowed hundreds of millions of dollars against it. So it became this really difficult situation for them where they're kind of like trapped. And I think that kind of worried people just a little bit.
This is something else that they're just all these people have entrusted them with their savings and their money, and they do this with it, and then we just talked about them throwing it at a literal Ponzi with what we were just talking about with Terra Luna. I mean, this is just, and apparently we don't even know who they're lending money to. This particular, their whole thing is that they're a lender. I will say the whole idea of crypto lending is so, like, I never, I know you said we don't know who they're lending to, but I don't even understand who the market is there. I mean, the one interesting thing I've ever heard from this is that right when the one good use of crypto lending, and this is a very specific use case, is that when Yuga Labs, the makers of the Bored Ape Yacht Club, when they were doing their ApeCoin airdrop, basically they have a cryptocurrency now, and anyone who owned a Bored Ape NFT was going to get an airdrop of free ApeCoin as like a thank you for being part of the community. And apparently someone realized that there was a Bored Ape in like this like holding block or something for this company or firm that allows people to like rent crypto assets or something like that, like rent NFTs. I don't know why you would do that, but this guy found a pretty great use. So he took out a crypto loan. I don't know who he took out the loan with, but he took out this loan, and he then rented that Bored Ape from that company. And because he was technically the holder of the Bored Ape at the time, when Yuga Labs did the ApeCoin airdrop like the next day or 2 days later, he's the one who got the free ApeCoin. He got something like $200,000 in US dollars for just holding that Bored Ape. And then he returned the Bored Ape to the rental company and then got his money back minus like whatever small fee there was for the rental and like to hold. And then he returned the money back to he paid the loan off, and he then walked away with $200,000 in free ApeCoin. And I think that's the only use of this whole idea that I've ever seen that made any sense, and it's a very niche specific use case.
Yes. Yeah, it's ultimately all this amounts to is you're moving things around in a circle and changing things around in sleight of hand, making it look like there's all this yield being formed by printing tokens and destroying tokens, burning them and switching them back and forth and creating all these derivatives and moving them between chains. At the end of the day, there's no value created here, right? It's actually destroying value because we're burning all of this energy. We're burning up all of these graphics cards. It's literally the most wasteful thing that's probably ever been created. Yeah. And there's nothing produced.
Right.
There's nothing produced. The fact that I've spent the last year studying this stuff makes me kind of sick to my stomach because honestly, it's like the most useless thing that's probably ever been created.
Do we know how much? Again, I know you said we don't know who were they lending to. But do we know what what people were paying for those loans? Like what they advertised as what your annual rate was?
So what they would advertise to customers, you could borrow for as little as 1% from Celsius. Right? But the trick was that you had to over collateralize your loans. So like if you wanted to borrow against Bitcoin, you would give them, for every dollar you'd borrow, you'd give them $4 worth of Bitcoin, and then you could get that 1% loan. What they would do then is then take that collateral and then re-loan it out to other places to generate yield. So that's how they would make money on those loans to customers. This is all based on rehypothecation of assets.
Right.
In terms of what their institutional clients were paying, that's something I have no answer to. It had to have been, in order to have been sustainable, it would have had to be, in the high double digits, just based on what they were paying out. In practice, like I said, though, I think most of where their actual, I think at one time they were making money. I think at one time they may have been actually making enough to pay the yield. And that was all in these DeFi protocols, various pools, kind of really these weird esoteric things like on Solana and other chains where they're just swapping money around. And really, they really weren't really a lending company. They were really, it kind of makes it sound more illustrious than it is. They were kind of like a hedge fund that was just like engaging in all these incredibly bizarre and risky trades to try to generate all this yield. They really weren't. I don't think institutional lending was ever like the major part of their business, even though they kind of portrayed it like it was.
Right. And I just to give people an idea of where we are right now, and I thought this is, the tweets that people have been sharing, and I grabbed some screenshots myself on June 11th. So that's just 11, 12 days ago. Alex Mashinsky from his own Twitter account. There was another Twitter user, another crypto guy who's talks about how he's hearing about Celsius accounts being locked and people can't withdraw. And then Alex Mashinsky himself tweets at him, this other Twitter user, Mike, do you know even one person who has a problem withdrawing from Celsius? Why spread FUD and misinformation? If you are paid for this, then let everyone know you are picking sides. Otherwise, our job is to fight TradFi, traditional finance, together. And literally less than 24 hours later, Celsius Network makes the announcement that they are pausing all withdrawals, and that's still where we are. This is still where we are right now.
Exactly. Yes. He made it. Yeah, that was the thing. They were never very careful about some of the things they said. And for weeks before they announced they were pausing withdrawals, there were these issues that kept cropping up where people were placed on quote unquote hodl mode, which was the company's supposedly the company's way of securing your account in case of a concern that maybe you're being hacked or something. And people kept reporting hey, I can't access my funds, and the company would say, well, this is just FUD. It's the people the short sellers trying to spread rumors and things, and there's no truth to it. And of course, eventually everyone ended up in hodl mode. So it's kind of ironic, I guess.
Right. And of course, there was that prescient blog post as well, where they tried to again officially through the official Celsius Twitter handle, and then also they put a Medium post up. Damn the Torpedoes, full speed ahead. It's this is them trying to tell everyone everything's okay. Just moments before they are holding people's.
And it worked.
Right.
It worked for a lot of people. It worked, and that's the thing that's.
So people were people were believing them and trusting them up to the very end, weren't they? Wow. People still
do. Jeez. There's a lot of people that are still saying that the money's there and that they're going to get fully reimbursed and that everything's okay. And you can't, I don't know. I kind of go back and forth on that. If you just lost your life savings, I guess I would be in denial too. And you had believed in somebody as much as they believed in this guy and in this company. You almost can't blame them. But at the same time, yeah, it's kind of obvious that, things were not as they seemed for a very long time.
Right. And to close out here, this has been fantastic. Really helped me, especially, and I'm sure a lot of my listeners walk through all of this, because Celsius is obviously, I think, very purposefully, a very confusing business model where they were portraying themselves as something and doing something even more convoluted in the background. You are currently your longtime Twitter account that you've been using, the Mike Burgersburg account, the one that you've been doing all this reporting, all this detective and investigative work into Celsius on. You suddenly, just hours after I reached out to you at that very account through direct message, you got all of a sudden locked out of the account. What happened?
I still don't know. The email and all of the login information was changed apparently. When I tried to access the account, like I was logged into it, and then I was away from my computer for a minute, came back and was logged out of it. And when I tried to log back in, it said the email that I was using wasn't linked to that account or whatever. So I tried to recover it, and Twitter is saying that they can't help me now. So I don't know if someone tried to access it and was somehow able to change the login credentials or what, but apparently Twitter's not going to help me recover that, so that's gone. Unfortunately, Mike is dead.
And obviously, we don't know for sure who or what.
Oh, who knows?
Right,
Twitter is a cesspool. I mean, anything is possible. And I mean, I've had other issues too, where I've had tweets reported and things, and I'm pretty careful about trying to be respectful for the most part. I mean, occasionally maybe I lose my temper a little bit, but I try not to say things that break the rules. And I've gotten reported, and I've gone through a lot of crap with it. So
right.
The funny thing is that if this was an attempt by someone to silence me, they're about a day late and a dollar short, because kind of already did far more than I ever set out to do with this. So
hey, who knows? Maybe they thought you were onto something else, and you should look back on something. And maybe there's another big shoe about to drop in all this, and they thought you were on the cusp of it. And
I was just asking questions about Voyager, so maybe that was it. I don't know, but.
Oh, well, you might have to come back on another day for that. Is that related to Celsius, or is this something another?
Well, yeah. Voyager is the Canadian, actually publicly traded company that has an exchange, and they also do this crypto lending. They actually had a large amount of funds with Celsius for a long time. Apparently had exited that position in time. However, that turns out they also had very large exposure to the Three Arrows Capital thing, which just exploded. And actually today they just announced that they got a massive bailout from Mr. Sam Bankman-Fried and FTX, the second crypto lending company after BlockFi, to get a bailout from him in like a week. So, I was just curious. I really don't know much about them. I was just kind of asking questions about trying to figure out what their wallets were and stuff. And that's when things disappeared. But who knows? I mean, maybe it's all a vast conspiracy against me. Maybe it's nothing. It doesn't really matter. Right. Fortunately, this for me is just kind of a weird hobby that I never really wasn't making my livelihood from it or anything. So no harm, no foul. I haven't really lost anything, in my opinion.
Well, all of a sudden you're, from what I've seen, you seem to be the number one, at least in a critical way. I'm sure there's many pro-Celsius experts out there, but I don't think they're much in demand right now. I don't think you need anyone talking about how great Celsius is where no one can access their funds. It's just an incredible story. Just another, it seems like something so big, but it really is just like another blip on the whole crypto cog. It's just unbelievable. Mike Burgersburg, thank you so much for joining me. And where can people? I know you're not at Mike Burgersburg anymore on Twitter, at least for the time being. But where can people find you right now?
So my Twitter handle is now at Dirty Bubble Med, MED, because I couldn't spell out the full thing. It's just under Dirty Bubble Media. And then I have a Substack, which is Dirty Bubble Media at Substack. And that really is where I have a lot of the stuff that I really put a lot of time into. So that's kind of where the real meaty stuff is. So if you're interested, go there and you can learn about more than just Celsius. I've written about other things too. So.
All right, awesome. Thanks a lot, Mike. Really appreciate you taking the time to walk us through all this. And we will be following everything that unravels and happens down the line with Celsius right here on Scam Economy as we approach episode 25, 30, 40, 50. Who knows what will happen with Celsius and all of these customer and client holdings that are currently frozen in their accounts if they are really actually frozen in their accounts. We'll find out. Let's just say the temperature has dropped. It's cold. The accounts are definitely frozen. And if you're a customer or a client of Celsius, you're probably wishing right now that we were dealing in Fahrenheit. Patreon.com/MattBinder to support this show. YouTube.com/MattBinder for the video episode and post-show live stream, as well as twitch.tv/MattBinder for the post-show live stream. Support this show by leaving a review on Apple Podcasts and Spotify and telling all your friends about it. Scameconomy.com for the podcast version of this show. Check out my other show, Doomed, at doomedcast.com. Follow me on Twitter at MattBinder. And with all that said, I will see you all next time on the Scam Economy.